All right. So I want to create a masterclass and talk about ADU financing. And the reason why is a couple of my neighbors, actually two on my street, are actually doing renovations. So here's one of them talking about building an ADU. So how California homeowners are turning unused space in rental income, family housing, and long-term equity. So, really, this is about me. Been in this industry 24 years, thousands of families helped, educated a ton. Areas of focus has been conventional renovation financing, jumbo FHA, some complex scenarios, ADU, and equity-based strategies. And I've been around for a while, but always here to help. Feel free to schedule time with me online. We'll leave details at the end of this on how to do that. So, we're going to learn today just kind of the roadmap, the basics, numbers, financing, and how to make it work, right? So, we're going to unpack each of these items here for you. So, everyone's talking about ADUs. Well, California's housing mass stopped working, so homeowners start building their own solution. What's driving it? A couple things here. Persistent statewide housing shortage, home prices outpace incomes in most metro areas, rents that make second units generally valuable, an aging population that wants to stay near family, adult children, returning home, growing interest in multi-generational living. So ADU doesn't solve the housing shortage, but it can solve yours, right? So what exactly is it? An accessory dwelling unit, a complete separate home from your property. It must have its own kitchen, bathroom, sleeping area, separate entrance, and it can be a form of a detached or attached addition, garage conversion, basement. Few in California, I know, space above an existing garage. So types of ADUs, as I mentioned, you have a detached, which is standalone structure, most privacy. You have an attached one, which is attached, so you could think through a wall or a garage conversion. We have a junior ADU, which is built within the home's footprint, smaller size limits, may share a bathroom, right? Or conversion of an existing space. Now, why homeowners build ADUs? It's rarely just one reason. Common motivations that we hear a lot are rental income, housing for parents, housing for adult children, a home separate from the main house, guest house for a visiting family, increasing overall property value or long-term flexibility. Circumstances could change, right? So an ADU is one of the few home improvements that could pay you back every single month. So California, this is the focus on the state again. We do ADUs in all states or finance them, but it's dramatically made it easier to build. Simplified, faster permitting. We reduced minimum lot size and design restrictions, relaxed parking requirements, right? Reduced setback requirements in many cities, and owner occupancy requirements are loosened to most ADUs. Now, the opportunity here is rental demand. Let's talk about it. There's a couple of forces here. Rental demand is the biggest one. Rent growth over the past decade, vacancy remains super tight. And then we have a housing supply, right? So new single family construction is not kept pace with growth. I've talked about this several presentations. It's one of the fastest growing categories is looking at an ADU. So this is not directional, not a forecast, but your local market matters more than any statewide trend. Keep that in mind. Now, typical ADU costs. I'm not getting into the fine dollar because it can depend on each place, but let's just box them into maybe three main ones. Small and efficient, right? Which is your studio to one bedroom, medium two to one to two bedrooms. Luxury could be two or more bedrooms, right? What's included? Construction, permits, fees, utility connections, design and engineering, and a contingency reserve. What's what adds costs? The lot usually matters more than the floor plan. Hey, my house, it's on a slope. That could raise the budget. Why? You have to engineer for that. So difficult utility access is another one. Sewer connection distance, electrical panel upgrades, water line extensions, foundation type, limited site access. These sorts of things could be more cost in certain areas than others. So keep that in mind. Now, two identical floor plans can cost very different amounts because what's under and around the lot. So from idea to move in, planning and budgeting is your first step. Design and architectural drawings are the second, permitting, construction, and then it goes to final inspection. And then you get what we call the certificate of occupancy. So financing overview. Really, let's talk about two main types to start, right? With the toolkit. One is a home equity line of credit or a home equity loan. The third there in that little equity base is a cash out refinance. Now keep in mind the first two are second loan, so you don't have to touch that first mortgage. The third is refinancing that first mortgage. Depends if it makes sense to do so. That's one thing we like to go over with our clients. Now the other is looking at renovation financing, construction loans, or construction to permanent financing, which is what we call the purpose built HELOC. So let's talk about this. Home line of credit is revolving line of credit that uses your home as an asset. So you only draw what you need when you need it. Interest may accrue on an amount needed. It's flexible, right? So risks are variable interest rate. Payment can increase as rates or the balances change, and the draw period eventually ends within usually 10 years. A HELOC tends to make sense for homeowners who want flexibility to draw funds gradually. So the other is a HELOC. Similar to HELOC, it's a fixed rate though. It's a loan. So it's got a fixed monthly payment, lump sum at closing, predictable amortization schedule, right? So that's the differences there. And so a HELOC tends to fit defined project with a known total cost. Cash out refinance was that third option, if you recall, and that was replacing the entire first mortgage. So if the current rate is at or above today's market rate or your blended rate, makes sense to go here, then take a HELOC. This is where you'd take it. When it doesn't is when the mortgage rate that you currently have is like 2.5 and you have an $800,000 balance. And let's say you're looking for maybe just $100,000. It doesn't make sense in that case. So it would make sense if you have a flip it, you're looking for 500,000 to do renovation costs and your current loan's 100K. It may make sense to do refinance. Seriously. Why? Even though you might have a lower rate, the overall blended rate between the first rate and the second rate may actually be lower. So this is for many homeowners sitting on a low first rate. Cash out refinancing is the most expensive way to fund an ADU. However, in some circumstances, it may be worth looking at. Okay. Renovation loans. This is built for homes that need work before after purchase. There's a lot of advantages here. As you can see, you finance to purchase an ADU in one loan. You base off of future and completed value of the property and may allow for a lower down payment than just a conditional construction loan. So it does require more documentation. The contractor and jar requirements are part of that. Timeline is usually longer at closing. Now we have construction loans. This is short-term financing while the ADU is being built. Simple how it works, really. Funds are released in draws as the construction milestones are completed. So let's say you complete the foundation, draw one, then you're going to complete basically building out your post and building out your overall structures, draw two. Then you might do drywall and basically expanding the exterior of the home. Draw three, roof, draw four. Simple, right? So payments are generally interest only during construction. Builders pay directly from those draws that we just went over. And a loan is typically repaid or converted at completion. A standalone construction loan usually requires a second closing after the ADU is finished. However, there are some construction and permanent financing like this one, where it's essentially exactly like the first one, but it's just one closing instead of two. So for many homeowners, building a larger ADU construction and permit is the least hassle from start to finish. So conventional financing, let's talk about just conventional requirements here. The standard path is what we like to call this. The down payment varies by transaction and loan to value. Credit score requirements set the loan program. Loan to value apply to the after completed value. Now, the idea bar is, of course, steady documented income, solid credit history, meaningful equity or down payment that's available. FHA, similar, but credit is such an issue here in some cases, right? More flexible credit guidelines. Lower down payment, as low as 3.5 to 5%. Renovation specific FHA, like the 2 3K streamline, which is only allows for a certain amount, or the full allows for a larger amount based on your county and specific guideline areas. Now, owner occupancy requires is a thing, right? You have to own a property that you live in to do FHA. Mortgage insurance is always required on every FHA loan, and the property must meet FHA standards. VA, very similar to FHA, but there's no mortgage insurance. It has to be a primary home, and it is a benefit for veterans and eligible service members. So you have to qualify for the VA home loan to use this particular program. Jumbo, very similar to conventional. However, there are going to be a little bit more, I would say, red tape in some cases. Higher end construction budgets that may exceed those conforming loan limits is really why folks go here. Now, keep in mind, no matter on credit, assets. You have to have reserves to step into a jumbo home loan. Jumbo underwriting is more borrower specific. It requires reserves, credit depth, and income documentation. They all carry a lot of weight in this circumstance. So here's the big question. Can rental income help you qualify? Often, but the rules depend on the scenario. What lenders may consider projected future rental income on a newly built ADU are subject to the loan guidelines. Existing rental income, if the ADU is already built and leased, may actually work right away with a lot of our loan programs. Market rent estimates for a qualified appraiser is always required in any of these situations. Keep in mind, the rent always counts dollar for dollar. If it doesn't, guidelines percent usually about 75% of the gross amount. Any rental estimate works generally must be appraiser support. We have to look at comparable rents in that area. It always helps me qualify for more. It depends on the full loan scenario, not just the ADU. So keep those items in mind. Now, so here's our ROI. Simplified. Every market, project, rental scenario is different. Treat this as a framework, not a promise, but this does show total investment, monthly offset, and of course the value increase. So multi-generational living, a big thing. Most countries have done this for years now. We're starting to see more of it and more of it in California. So it's one of the fastest growing reasons why family build common scenarios, aging parents, adult children, a caregiver needs separate but neighborhood housing, preserving privacy while staying connected and sharing costs across the generations, right? So aging in place, similar, a growing alternative to assisted living. This is great when you want to keep your parents close instead of across town or out of state. It's often more cost effective than long-term assisted living. It allows for a caregiver to live on site. Adult children, we're seeing a lot of folks coming home, right? We're seeing kids returning home to save for down payment, young families needing a bridge before buying their first home. There's a lot of reasons here. This is a great reason to look at an ADU. Rental strategy. Now, match the strategy to the goal. Common approaches, long-term traditional financing, housing for family members, student housing for a nearby university. We see this a lot throughout California with all the state and universities we have through the UC system, corporate or traveling professional housing. We see it a lot for traveling nurses. Short-term rental rules vary significantly by city, however. So you want to confirm with the local ordinances before planning around that income. Builder selection checklist. The builder matters as much as loans. So you want someone who's licensed in good standing, carries current liability insurance, provides variable references, uses a clear, detailed written contract, gives a realistic timeline, not just a hopeful, communicates proactively, not just when asked, and has experience specifically with ADUs, not just remodels. So mistakes would be underestimating total cost, skipping a contingency reserve, choosing the wrong financing project timeline, hiring a builder without checking references, not conforming permit requirements before starting design, and waiting too long to start. These are huge mistakes that we've seen over the years. So real case studies. Here's one. The family built a detached ADU for aging parents. They used a home equity line of credit because they had a super low first rate. They funded construction out of that HELOC as cost comes due. Now, the investor, in this scenario, converted a garage into rental unit. They used a cash out refinance because they owed, as I mentioned earlier, $100,000 on a 2.5% interest rate. Whoever did do the entire garage, it was about $300,000. So because of that, it made more sense to do a cash out refinance. Retired couple, they built this more ADU to move into. They rent out the main home for income. They use construction to permanent financing for one simple closing. Now they have passive income through the main house. Here are some frequently asked questions. Can I build over my garage? Yes. Subject to structure review and local zoning. So you want to contact a contractor and your local planning office. How much down payment do you need? Depends on the financing path. Some equity-based options don't require any. How long does a whole process take? It varies by city and project scope. You want to ask your contractor for a realistic local timeline or contact your permitting office because that's the biggest thing that we deal with often is the permitting. Can you use future rental income to qualify? In many scenarios, yes, but it's subject to the appraisal and program guidelines. Can my parents live there? Absolutely, yes. ADUs, commonly used for family housing, as we've already discussed. So how our team helps. Financing strategy we want to build around your goals. Builder coordination throughout the process. We have a mortgage coach analysis comparing every financial option side by side. Fast responsive communication from application to funding, just like any of our other transactions. So here are some examples that we'll build in Mortgage Coach. It's a system that we use that's incredible that could do a side by side and give you a good idea of what it looks like. And we want to coach you in that. So financing strategy will matter. So the loan you choose can cost or save tens or thousands of dollars, which is why we want to advise you. So keep in mind, keeping a low first mortgage rate instead of refinancing away is something to think about. But avoid unnecessary refinances to reset your loan term. Matching the financing timeline to the actual construction timeline is huge, and choosing the option with the lowest total cost, not just the monthly payment. So here are your next steps. Set a call. Review your current equity and mortgage. Compare financing options side by side. Build a complete project roadmap. We have resources, but here's some things I'd like to share with you. You want to get a builder interview question checklist. If you need one, shoot me a message. schedule a call with me. We'll get that to you. An ADU budget worksheet, we have that. We'd love to help you and get that. Otherwise, your contractor could help with that. Local permit resource guide. This is by city and county. So those are things that we want to connect you with, figure out who your planning office is and figure out what that looks like. We can help guide you in that. And then, of course, a list of recommended professionals in the area. Regulations and permitting requires by city. Always verify current local requirements before financing plans or finalizing plans. Pardon. So if you have questions, I'm here. Let's get a call. Let's talk about anything that you have and how we could help you with that. There's my contact information. There's a link below to schedule a call with me. We'll love to help and guide you through this process. Thank you for joining me today.